Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Irfan bin Mohsen, and today I would like to discuss about my part, which is part 1, business transaction for January 2023. So, for the 1st January, QPS Trading Senior Bank started the month with RM5,000 cash and RM10,000 in inventory. So, what particulars that involved in this statement? So, for the 1st January, is cash. What is cash? Cash is asset. So cash debit RM5,000, inventory RM10,000, and also capital 50,000. Why capital? It because it started the month, so it's capital. So capital is credit RM50,000. Why 50,000? Because of 10,000 plus 500 equals to 50,000. So moving on to 3rd January, purchase additional inventory on credit from a supplier worth RM8,000. So for the first one that involved is inventory, and the second one is account payable. Inventory debit RM8,000, while account payable credit RM8,000. What is account payable? Account payable is a liability. So for the 5th January, sold good worth RM6,000 on a credit to a customer with a cost of 3,500. So account receivable, sales revenue, cost of goods sold, and also inventory that are involved. So account receivable is an asset. So account receivable is RM debit RM6,000, sales revenue credit RM6,000, cost of goods sold debit RM3,500, and also inventory credit 3,500. For the 10th January, rent expense and also cash. Rent expense debit RM1,200, and also cash credit RM1,200. For 12th January, purchase a laptop for RM2,500 on credit to support business operation. Bear in mind, there are 3 office thingy. For the first one is office equipment, second one is stationery, and third one is office supplies. So for the office equipment is an asset, and for the stationery and also office supply is an expenses, right? So office equipment is the laptop, so debit RM2,500, and also account payable RM2,500. On 15th January, paid RM500 in cash for an advertising campaign. So advertising expense is 500 debit, also cash is 500 credit. On 18th January, receive cash of RM4,000 from the customer for the January 5 sale. So on 18th January, particulars that are involved is cash and also account receivable. So cash RM4,000 debit, and also account receivable RM4,000 credit. So for 20th January, purchase RM500 in office supply with cash, right? So 20th January, office supplies 500 debit RM500 ringgit, and also cash credit RM500 ringgit. For 25th January, sold good for cash worth RM4,000 with a cost of 2,200. So cash is RM4,000, sales revenue is credit RM4,000, cost of goods sold debit RM2,200, and also inventory credit RM2,200. And for the last one, on 28th January, paid supply RM4,000 as a partial payment for the January 3rd inventory purchase. So particulars that are involved is account payable and also cash. Account payable debit RM4,000 and cash credit RM4,000. So yeah. Alright, so let's open up the ledger account. For the first one is cash. On January 1st, capital debit RM5,000 and balance is RM5,000. January 10, rent expense credit RM1,200 and the balance is 3,800. It is because of 5,000 minus 1,200 equals to 3,800. January 15, advertising expense. So credit RM500 ringgit, balance 3,300. January 18, account receivable. Debit RM4,000, balance is 7,300. January 20, office supplies. Credit RM500 and the balance is 6,800. January 25, sales revenue. Debit RM4,000 and the balance is 10,800. For the last one is January 28, which is account payable. Credit RM4,000 and the balance is 6,800. Moving on to the inventory. On 1st January, capital debit RM 10,000 and the balance is RM 10,000. 3rd January, account payable, debit RM 8,000 and the balance is RM 18,000. It is because of 10,000 plus 8,000, so the balance is 80,000. January 5, cost of goods sold, credit 3,500 and the balance is 40,500. And for the last one, January 25, cost of goods sold, credit RM 2,200 and the balance is 12,300. Next is account receivable. January 5, sales revenue, debit RM 6,000 and the balance is of course 6,000. January 18, cash, credit RM 4,000, so the balance is 2,000. It is because of 6,000 minus 4,000. So for the last one is account payable. So date, 3rd January, inventory, credit RM 8,000, the balance is 8,000. Office equipment, credit RM 2,500 and the balance is 10,500. It is because of 8,000 plus 2,500 equals to 10,500. And for the last one is January 28, which is cash, debit RM 4,000, so the balance is 6,500. After that is sales revenue. On January 5th, account receivable, credit 6,000 and the balance is 6,000. And January 25 is cash, credit 4,000 and the balance is 10,000. So for cost of goods sold, on January 5th, inventory, debit 3,500, balance is 3,500. And also on 25th January, inventory, debit 2,200 and the balance is 5,700. It is because of 3,500 plus 2,200. So move on to rent expense. On January 10 is cash, debit RM 1,200 and the balance is 1,200. So for advertising expense, on January 15 is cash, debit RM 500, balance is RM 500 too. So for office supplies, on 20 January is cash, debit RM 500 and balance is RM 500. So for the last one, last but not least, office equipment. On 12th January is account payable, debit RM 2,500 and also the balance is RM 2,500.
Hello sir, my name is Marcia Sasabila Foster and now I will explain for the part 2 adjustment. So first we have to record the adjustment in the journal. For the first one we have wages. Wages is expensive, so we put it in a debit side RM 600. For accrued wage it's a liability, so we put it in credit side RM 600. Next we have prepaid rent. Prepaid rent we put it in debit side RM 600 because it's an asset, and for rent it's expensive, so we put it in the credit side RM 600. Then for the office equipment, laptop RM 2,500, we put it in the debit side. For depreciation is RM 4167 and it same goes for accumulative depreciation. For the last one, bad debt expenses, we put it in debit side RM 100, and for the allowance doubtful debt we put it in the credit side RM 100. Okay, next for number 4, post adjustment to the ledger account. So once we're done with the journal, we have to put it in the ledger account. So posting adjustment to the ledger account. Okay, so for the first one, we have wages account January 31st in the debit side. In the debit side, we put it wages RM 600 because it's expenses, and in the credit side January 31st accrued wages RM 600 because it's a liability. Okay, so basically we just have to put the journal to the ledger account. Okay, next we have rent account. On January 31st, in the debit side, we have prepaid rent RM 600 because it's an asset, and in the credit side, we have rent January 31st RM 600 because it's expenses. Okay, next we have a laptop account January 31st. In the debit side, we put it office equipment RM 2,500. Then in the credit side, we have depreciation RM 41.67, and same goes to with the accumulative depreciation. For the last one, we have allowance account. The debit side, January 31st, bad debt expenses is RM 100, and in the credit side, allowance doubtful debt also RM 100. Thank you.
Hi sir, my name is Siti Adiatul Amira and I will continue part 3, which is the trial balance. So firstly, trial balance is a summary of all the debit and credit balances from the ledger account. It is to ensure that the accounting equation, which is assets equals to liability plus equity, is balanced. So when both sides are balanced, it means the mathematical is correct. So we will go through one by one for the QPS Trading Sdn Berhad trial balance as on January 31st, 2023. So firstly, cash is an asset. So we put 6,800 on the debit side. Next is inventory. Inventory is a current asset, which is 12,300 on the debit side. Accounts receivable is a current asset, 2,000 on the debit side. Office equipment, non-current asset, 2,500 debit side. And then the office supplies, current asset, 500. And then we have capital is equity, 50,000 on the credit side. Next is accounts payable, which is a liability, 6,500 credit side. Revenue equity 10,000 also on the credit side. Next we have cost of goods sold, rent expense, advertising expense, and wages. Four of them are expense, so we place them on the debit side. Next we have accrued wages on the credit side because it's a liability, 600. And then prepaid rent, current asset, 600, a debit. And then we have rent and expense, 600, debit side. We have depreciation, 41.67 on credit side. And then we have cumulative depreciation, 41.67 on debit side. And we have bad debt expense and expense. So we have 100 on debit side. And lastly, allowance doubtful debts and equity. So it's on credit side. So we total both of them credit and debit, we will get 32,241.67. So that means it is balanced.
Okay, so hello everyone. My name is Tanush Jyoti Sanadlaki Sadasivam and my ID number is 0120224070957. So I'm here today to explain about part 4 financial statements for QPS Trading Sdn Berhad. So I'm going to be starting off with the statement of profit and loss for the year ended January 31, 2023. So let's get started. So first of all, the description for statement of profit and loss is divided into 5 parts, which are the revenue, cost of goods sold, gross profit, operating expenses, and last but not least, the net profit. So let's start with the revenue. So the revenue is stated as 10,000 ringgit in the table, and that was found directly in the trial balance under the credit column labeled as revenue. And next up, we have our cost of goods sold. The first description for this is the opening inventory, which is listed as 12,300 ringgit, and the next one is purchases, which is listed as 5,700 ringgit. Both of these amounts were found under the debit column in the trial balance labeled as inventory and also cost of goods sold. And next up, we have our closing inventory, which is labeled as 12,300 ringgit. It is the same as our opening inventory because in the trial balance, it did not indicate any changes in the opening inventory. So we just maintain the same amount. And after that, to calculate our last amount of cost of goods sold, all we have to do is take our opening inventory, add it with our purchases, and then less it with the closing inventory. So the final answer for this, for our cost of goods sold, is 5,700 ringgit as stated in the table. And next up, we have our gross profit. The formula for gross profit is very simple. We just take our revenue and less it with our cost of goods sold. So our revenue in the table was 10,000 ringgit and our cost of goods sold was 5,700 ringgit. So when we less it, we get the answer of 4,300 ringgit. So that's our gross profit. And then after that, we are going to talk about the operating expenses. So, all of the descriptions in the operating expenses part was listed in the trial balance under the debit column. So, the first description is the rent expense, which was 1,200 ringgit. The second one was advertising expense, which is 500 ringgit. The third one is office supplies, which is also 500 ringgit. The fourth one is wages, which is 600 ringgit. And the fifth one is depreciation, which is 41 ringgit and 67 cents. And last but not least, we have our bad debt expense, which is 100 ringgit. So our total operating expense is we get it by just adding on all of these operating expenses, and we'll get our answer of 2,941 ringgit and 67 cents. And last but not least, we are going to talk about our net profit, in which the formula is we take our gross profit and then less it with our operating expense. So our gross profit was 4,300 ringgit, and our operating expense, which I just explained, was 2,941 ringgit and 67 cents. So when we minus, we get our answer for our net profit, in which it is 1,358 ringgit and 33 cents. So that's all for the statement of profit and loss. Okay, so now let's talk about our statement of financial position for the year ended January 31, 2023 for QPS Trading Sdn and Berhad. So, first of all, our description for this statement of financial position is divided into the assets, the liabilities, the equity, and also, last but not least, the total liabilities plus equities. So, let's get started with assets. The first part in assets is the non-current asset. The first description is the office equipment, which is 2,500 ringgit, and it is taken from the office equipment debit entry in the trial balance. And next up, we have our accumulated depreciation of 41 ringgit and 67 cents, which is calculated based on the depreciation provided in the trial balance. We must less this amount. And next up, we have our net non-current assets, which is 2,458 ringgit and 33 cents, which is actually derived by subtracting our accumulated depreciation from the office equipment amount. And next up, let's move on to the current assets parts. For the current assets, the first description is the cash, which is amounted to 6,800 ringgit, which is taken directly from the trial balance. And the next one is the accounts receivables, which is amounted to 2,000 ringgit, which is derived from the trial balance and adjusted for the allowance for doubtful debts of 100 ringgit to get the amount of 1,900 ringgit for the net accounts receivables. And next up, we also have our inventory of 12,300 ringgit, which is taken from our closing inventory from the statement of profit and loss before this. And after that, we also have our prepaid rent amounting up to 600 ringgit, uh, which is taken from the prepaid rent debit entry from the trial balance. And last but not least, we have our total current assets, which amounts up to 21,600 ringgit, uh, uh, which we get by which we get when we sum up the cash, the net accounts receivables, the inventory, and also the prepaid rent. So now let's move on to the liabilities. So we have the current liabilities here, and the first description is the accounts payable, which is amounted to 6,500 ringgit, which is taken directly from the trial balance credit entry. And after that, we have our accrued wages, which is 600 ringgit, which is also derived from the trial balance from the accrued wages credit entry part. And the last part for the liabilities is the total current liabilities, which is 7,100 ringgit, which is pretty much when we sum up the accounts payable and also the accrued wages. And next up, let's move on to the equity part. So the first equity description is the capital, which amounts up to 15,000 ringgit, which we get from the capital credit entry in the trial balance. And we have to add the capital with our net profit of 1,358 ringgit and 33 cents, which we get from our statement of profit and loss before this. And we also have to less the allowance for doubtful debts, which is 100 ringgit, which is the adjustment made for bad debts from the trial balance. We get that from the trial balance as well. And the last one for equity is the total equity, which amounts up to 16,258 ringgit and 33 cents, which is calculated by adding the capital and net profit, and then subtracting the answer with the allowance for doubtful debts. So the last part for our financial position, statement of financial position, is the total liabilities plus with the equity. So which amounts up to 24,058 ringgit and 33 cents. So that is all for my part. From my part, what I can conclude is that for both of the profit and loss and also the financial position, the trial balance sheet is extremely important, and we must make sure that there's no mistakes in the trial balance. So that is all. Thank you.
All right. Hello. My name is Edwin Shamil bin Zahiri, and I will cover upon this company, which is QPS Trading Sdn Berhad, for its bank reconciliation statement. So, what is bank reconciliation statement? So, the bank reconciliation statement ensures that the cash book aligns with the bank statement, so that we can adjust any errors that are in the cash book. So what we need to do first is we tick off the same description that are available in this both statements that are displayed on my left side. Okay, so we can see that the less allowance for doubtful debts is the same, which is 100, and also the inventory is also located at the statement of profit and loss, which has been ticked also. Okay, and then we have wages and also bad debt expense. So that are the same description that we needed to do the bank reconciliation statement. All right, moving on. This is the bank reconciliation statement for QPS trading. So as we can see from my left hand side, uh, this is the adjustment that are made for the bank statement. So basically, the bank statement ending balance is 6,800. So the adjustment include a deposit in transit of 1,000 and an outstanding check of RM 500 ringgit, which results in an adjusted balance of 7,300, as we can see from the table. Okay, next is the cash book adjustment. So we can see that the cash book is ending balance is also 6,800. The adjustments made the bank service charge of 50 ringgit and an NSF check of RM 300 ringgit, which leads to an adjusted cash book balance of 7,300. All right. So after we do the bank reconciliation statement, we need to have journal entries. So the first one is bank service charge. So on January 31st, 2023, a bank service charge of RM50 was recorded. So we put it on debit, which is bank service charge expense, 50 ringgit, and we also we put cash as credit, RM 50 ringgit. Alright, for the second journal entry, which is non-sufficient funds check, which is NSF, on 31st January 2023 also, the check for 300 ringgit was returned due to insufficient funds. So what we do is we put account receivable on debit side, which is 300 ringgit, and also we put cash on the credit side, 300 ringgit. So that's all from me. Thank you.
Assalamualaikum and hello sir. My name is Muhammad Lutfi Mohani bin Amir, and today I will be presenting the solution of two questions based on inventory pollution using the FIFO, which is first in, first out method. I'll be explained how we calculate the cost of goods sold, which is COGS, and the value of ending inventory for QPS training during January. Let me explain the FIFO method briefly. FIFO stands for first in, first out. This means that all the inventory purchased is sold first. In other words, goods are sold in order they are purchased, which reflect real world inventory movement. Let's look at the first question, where we calculate the cost of goods sold. QPS Trading made 3 purchases in January. January 1st, 50 units at 100 each. January 10th, 30 units at 110 each. January 20, 20 units at 120 each. The company sold 17 units of inventory using FIFO. We set the oldest inventory first, so 50 units from January 1st at 100 each equal to 5,000 ringgit. 20 units from January 10th at 110 each equal to 2,200. Adding this amount gives us a total cost of goods sold of 7,200 ringgit. And here are tables summarizing the cost of goods sold calculation. Next, let's calculate the ending inventory value after selling 17 units. Initially, QPS Trading had 30 units remaining out of the total 100 units. Using FIFO, the remaining inventory comes from the last 2 purchases. 10 units from January 10th at 110 each equal to 1,100 ringgit, and 20 units from January 20 at 120 each equals to 2,400 ringgit. Adding these amounts gives us a total ending inventory value of 3,500 ringgit. And here a table summarizing the remaining inventory calculation. In summary, the cost of goods sold using the FIFO method was calculated as 7,200 ringgit for 17 units sold, and the ending inventory value after the sale was 3,500 ringgit based on the remaining 30 units left. The FIFO method helps businesses value their inventory accurately and is especially useful when prices are rising or falling. That's all from me. Thank you.